Welcome to Texas Lone Star. I'm Laith Dyke, president and owner of Texas Lone Star. We appreciate you coming to visit. If you're looking to purchase a home, you might want to consider a conventional loan. A conventional loan is a loan where we use underwriting guidelines that are provided by two agencies, Fannie Mae and Freddie Mac. Those are the two government agencies that provide underwriting guidelines that as a lender we follow, and we make sure our borrowers meet those guidelines, and if they do, then we offer a conventional loan. The benefits of using a conventional loan to purchase a home are many. First of all, low down payment options. As a first-time home buyer, you can actually put down as little as 3% down on a conventional loan. Another option are fixed rates. Interest rates are fixed for 30 years on conventional loans. Also, lower and shorter terms are available, but you have a fixed rate for the life of the loan, which is a great option when you're buying a house for loan payment stability. Another benefit is the underwriting guidelines are straightforward. They're written by Fannie Mae and Freddie Mac, so we know exactly what the guidelines are. We can make sure that you meet those guidelines as part of our underwriting. And so it's very straightforward. When you work with an expert like Texas Lone Star, we're going to be able to navigate you through those underwriting guidelines and make sure you qualify, so that when we issue a pre-qualification, you can go out and feel confident about buying that home. Another benefit of a conventional loan is even when you put down as little as 3%, there is monthly mortgage insurance. It's called private mortgage insurance. However, if you have high credit scores, the premium or the monthly premium required for the mortgage insurance can be very low. Another benefit of having a conventional loan is the mortgage insurance actually drops off the loan when your balance reaches 78% of the original purchase price. So the mortgage insurance, although there when you start, will eventually drop off the loan, which will lower your payment. Another benefit of a conventional loan is there's no fee to Fannie Mae or Freddie Mac. There's no upfront fees that you pay to Fannie Mae and Freddie Mac to get a conventional loan. So the only fees you pay would be your normal closing cost, lender, title company cost, surveys and appraisals, which are standard and customary for a conventional loan. Finally, on a conventional loan, there's no prepayment penalty. That means that if you refinance to lower your rate, or you just pay it off early, or you decide to sell the house and pay the loan off, there's not a penalty for paying the loan off early, which gives you a lot of flexibility on the mortgage. So fixed rate, no prepayment penalty, gives you lots of flexibility when you have that conventional loan. Another great benefit of conventional loans is the maximum loan size is higher than some of the other loan types available. Are you looking to buy a house and considering an FHA loan? I'm here to tell you about the benefits and how an FHA loan might be the right loan for you. First of all, FHA loans are great for first-time home buyers. Down payments as low as 3.5%. It's one of the great benefits of an FHA loan. Another great benefit of an FHA loan is high seller contributions. What that means is if you get a contribution from an interested party, it could be the seller, it could be the realtor, it could be your lender. Those contributions can equal up to 6% of the sales price. That is a very high contribution. So even on a smaller loan amount, a 6% contribution could really cover all your closing and prepaid costs, leaving you only the down payment. FHA loans are beneficial for clients that have lower credit scores. Unlike a conventional loan where when you have a low credit score, your rate is a lot higher and so is the mortgage insurance. On a FHA loan, the mortgage insurance that comes along with an FHA loan is the same regardless of your credit score, so you're not being penalized for a lower credit score. In fact, on an FHA loan, you can actually have no credit score and still qualify for an FHA loan. In addition to being fair to a client that has a low credit score, from a mortgage insurance perspective, the interest rates are also lower on an FHA loan when you have a lower credit score. Having a low credit score, you're not penalized as much as you are on a conventional loan where the rate can be a lot higher for clients that have lower credit scores. An FHA loan, borrow with a low credit score, you still have a great interest rate that goes along with that loan. Other benefits of FHA loans are the terms of the loans are 30-year fixed rates or shorter terms, so it gives you some flexibility on what kind of loan term you're looking for, but fixed rates are going to give you a stable payment over the life of the loan, so you don't have to worry about a lot of payment fluctuation from an interest rate that's variable. There's no prepayment penalties on FHA loans, so if you ever want to refinance because rates have gotten better, or you decide to sell the house or just pay the loan off, there's no prepayment penalties on an FHA loan. Speaking of refinancing, if the market improves, FHA streamline refinances are really easy options to refinance your loan and lower your interest rate. They call them streamlined for a reason. It's because they're a lot easier to qualify for. There's no appraisal required, and the cost in connection with getting a streamlined FHA refinance are very low. Another benefit for FHA loans are the loans are assumable. So in the event that you decided to sell the property, you can actually have another buyer assume your loan, which may be an attractive way to sell your house, especially now in this market where a lot of the rates from the last few years have been very low. So when you turn around and try to sell that house, assuming that mortgage could make your house more valuable because the rate on the current loan that you have is better than the market. Are you a veteran and looking to purchase a home? We would love to talk to you about VA loans. A VA loan is one of the benefits you've earned as a veteran, and it gives you financing options to purchase your home. The benefits of a VA loan are, first of all, 100% financing for eligible veterans. That means that you can purchase a home with zero down payment. Another benefit of VA loans are low fixed interest rates. The interest rates are below market, and it's because you're a veteran, you're very well deserved, and it's just one of the benefits of having a VA loan. VA loan underwriting guidelines are very flexible. They're very generous to veterans that have lower credit scores. The closing costs on a VA loan are low. VA is very specific on what cost a veteran can pay. Lender costs are lower, title company costs are lower, appraisal costs are a little lower. So one of the benefits of a VA loan are just overall lower closing costs. On a VA loan, there's no prepayment penalty. So you can refinance, you can sell the house, you pay it off early. So none of that would trigger a prepayment penalty. And speaking of refinancing, VA offers what's called a streamlined refinance option. So if rates do go down and you want to refinance your loan, the process is very simple. There's not a long application process. The cost of that VA streamlined refinance are very low. So it gives you the veteran an opportunity to take advantage of a lower interest rate market. Another benefit of VA loans are long-term fixed rates, 30-year fixed rates. Of course, shorter terms are available, but the rates are all fixed, which gives you a stable payment. So you don't have to worry about payment fluctuation during the life of the loan. Are you thinking of purchasing a higher priced home? Well, a jumbo loan might be the right loan for you. A jumbo loan is a loan amount that exceeds the Fannie Mae, Freddie Mac conventional loan threshold. If the loan amount is above the maximum loan amount allowed by Fannie Mae and Freddie Mac, we call that a jumbo loan. When purchasing a higher priced home, some of the benefits of using a jumbo loan are as follows. Jumbo loans have long-term fixed rates. 30-year fixed rates are available, also shorter terms. It's not uncommon for a borrower that's purchasing a higher priced home to consider adjustable rate products as well. A lot of different products are available in the jumbo home loan space, such as 30-year fixed rates, 15-year fixed rates, 7-year ARMs, 10-year ARMs. There's a lot of different options available that give you different flexibility on how you can finance your jumbo loan. Most borrowers think that you have to put down a minimum of 20% when you're purchasing a higher priced home. That's actually not the case. We actually offer jumbo loans with as little as 10% down. There's definitely some high leverage options available in the jumbo loan space. A jumbo loan is considered a portfolio loan, which means the underwriting guidelines can vary between each loan program. Going to an expert like Texas Lone Star will help you navigate through the jumbo loan process. Are you self-employed and looking to purchase a home but worried about qualifying? A non-QM loan might be the perfect product for you. A non-QM loan is a loan in which the underwriting guidelines allow for alternative documentation to be used in place of tax returns to support your monthly income. The benefits of a non-QM loan are, first of all, using alternative documentation for income will allow you to qualify for a loan, whereas you wouldn't qualify otherwise using your tax returns. As a lender on a self-employed borrower, we always start by reviewing the tax returns to see if we can approve the borrower with the tax returns as step one. In the event that your tax returns don't support the loan request, then we'll go to step two and start looking at non-QM options. Examples of that are 12 months bank statements, where we would use 12 months personal bank statements, average the monthly deposits, throw out any deposits that are unusual. Whatever that monthly figure is, after averaging those deposits, is what we would use to qualify you for the loan. We also use business bank statements. Have borrowers that come in with a 1099. They receive a 1099 versus a W-2. We'll actually use the 1099 for qualifying for on a non-QM loan. What I'm getting at is that we get very creative on income documentation that is used to confirm that you qualify for the loan. It's a great option for self-employed borrowers where they don't qualify using traditional income documentation. Another benefit of non-QM loans are the rates are actually very good. Surprisingly, a lot of borrowers are expecting very high rates when they don't qualify using their tax returns and using alternative documentation for income. The great news is if you've got good credit, we're able to document your income using an alternative source. The interest rates are not too far off from what you'd get on a conventional loan. There's no prepayment penalty on a non-QM loan, which is another great benefit. What that means is you can sell the house, pay off the loan. There's no penalty for that. There's no penalty if you decide to make early principal payments. Or if rates drop and you qualify, you can always refinance the loan and there's no prepayment penalty for that either. Long-term fixed rates on non-QM loans are available, as well as ARMs, so you've got flexibility on product. And down payments can be as low as 10% on a non-QM loan. If you are looking to purchase a house and you're a first-time home buyer and you're interested in the various programs available, check out the information below that goes into detail for each loan program. And the added benefit to these programs as a first-time homebuyer are many. As a first-time homebuyer on a conventional loan, you can put down as little as 3%, which is only available to you as a first-time homebuyer. We also offer grant programs for first-time homebuyer that provide funds to you to use towards your down payment. The other benefits for first-time homebuyer are there's programs that are specifically for first-time homebuyers that provide lower interest rates and lower mortgage insurance if you qualify. Just because you've owned a home previously doesn't not necessarily mean that you're not a first-time homebuyer. Did you know that if you haven't owned a home in the last 3 years, we consider you a first-time homebuyer, which means you'd be eligible for all these benefits. Are you interested in tapping into the equity of your primary residence? Texas Cash Out Home Equity Loan is the loan you are looking for. The benefits of a home equity cash out refinance is it allows you to tap into your equity to pull cash out for any purpose. Texas law allows you to borrow up to 80% of what your home is valued at. Part of the process is we're going to get an appraisal on the home, and whatever that appraised value comes back at, we're going to loan up to 80% of that market value, and that would be your maximum gross loan amount. The loan terms are 30-year fixed rates, up to 30 years. Of course, we offer shorter terms, 15, 20, and 25 years, but 30-year fixed rates are available. There's no prepayment penalties on home equity cash out loans, so you never have a prepayment penalty. It's actually part of the Texas law, so no one can put a prepayment penalty on a home equity cash out loan. Pulling cash out to consolidate debt can also put a borrower in a much stronger monthly cash flow position. Because we're financing the loan for 30 years, the payments are low, and because the rates are fixed, it's a stable monthly payment, so you don't worry about payment surprises from payment fluctuation because the rate is fixed and it's a 30-year term. Interested in applying for a home equity cash out loan? On our website, you'll find a Apply Now button. Once you click on that button, it takes you to a short application. Complete the application, and one of our team of professionals will call you with questions and answers and get you on that road to a home equity cash out. Not ready to apply but have questions? Please call us. On our website, you'll have our phone number that you can call us. One of our team would love to talk to you about your home equity cash out. You can also find us on all the social media. Send us a DM. We'd love to hear from you.